Alright everybody, Stocks by the Numbers, welcome back. Wanted to do a quick update here. I know it's after hours, but I wanted to talk about STEM Inc., ticker symbol STEM, listed here on the New York Stock Exchange. Stock closed 1 3/4, down 7 cents, just a touch below 4%. And you can see up maybe a couple of cents here after hours right now in the moment. But I wanted to do an update because we technically did retest that 173 52-week low. Markets took a really big hit today. However, we did slightly bounce off of that low. So it's not essentially set in stone that we won't go lower. However, I do want to show you that the last time we hit that level, we actually triple bottomed, as you see, at 173, and then we had the big explosion throughout Wednesday and Thursday, bringing us up to north of 2 1/4. So the stock went on a really nice little percentage gain, little pop there after tripling bottoming at that low. And in my opinion, we could potentially break. This is a trend line here that I drew out. And this is going from the bottom of November 28th, 2023, connecting to that first low of 173 that was hit on March 15th, 24. And you can see I just kind of drew across those bottoms. So potentially in the moment here, in the short term, we could potentially pull back 160, 159. And I know earnings aren't coming till about here. So as you see, we could maybe even hit that 150 level. So unfortunately, there could still be some drops coming, in my opinion. However, it does look like here on my screen, since Wednesday, we did drop down. Let me readjust. And you can see Wednesday we dropped down, and we've kind of been just kind of tipping up and down, just I don't know where tipping came from, but we've kind of just been trading up and down inside of this little downward channel that looks like a descending wedge here on my screen. And we can see that the bottom here at the apex is potentially maybe 171 or maybe even 170. And then of course we'll have to see if we do confirm the wedge and pop out and break out of it. But in the moment, we could potentially again pull back a handful more cents. Next earnings coming out in May right here, May 2nd. Estimates of a loss of about 20.5 cents on revenue of 67.738 million. And in my opinion, that really doesn't seem like a big jump because this is that quarter last year, and we can see that the company posted a wider than expected loss, unfortunately, as they've been doing consistently. But the revenue came in over 4.5 million above these 62.7 million estimates. They posted 67.405. Now estimates are 67.738. So in my opinion, I actually think that the company will beat on the revenue side. Probably no problem in my opinion, but it's more of the EPS side and the bleeding I feel that Wall Street is really keeping an eye on. And I know the company spoke about some positive things. I know they got like positive adjusted EBITDA in the second half of 2023. They're looking for positive operating cash flow now moving forward into 2024. So unfortunately, it may not happen immediately, but I would say, based on what the company is saying, that the second half of this year, potentially like 6 months from now, 2 3/4, that is when the company is really going to be rocking and rolling. But like I say, in my opinion, when dealing with a lot of these smaller up-and-coming stocks, you really have to potentially deal with a lot of short-term volatility before they find that bottom out, restructure their costs and everything like they do, and then potentially start to form the rebound and the recovery. So we could potentially turn around 6 8 months from now, towards the tail end of this year, and we could potentially see the stock, back up here, $3.50, $4, $5 a share potentially. But of course, it's really up to them. But I have a feeling that Wall Street's really going to be looking for this EPS number, because even if the company, let's just say hypothetically, posts 67.4 million again, and let's just say they do the exact amount of revenue year over year that they saw this quarter last year. In my opinion, if they're able to post a loss of like 19 cents and actually post a more narrow loss than what we were expecting, then in my opinion, I think they're going to be rewarded even more. And I think Wall Street's going to turn and potentially be more positive on it, because recently we did have a couple of price target trims. As you see here, Piper Sandler lowers their price target from 3 to 2, maintains a neutral rating. About 3 weeks ago, Goldman Sachs, we saw, downgraded it from a buy to neutral, putting a price target of 2.5 from 5.5. So that's why right now, everyone still, in my opinion, they see the growth potential down the road, right? Because we looked at the backlog when the company posted earnings, and the backlog is up like almost 100% year over year. So we know the demand is there, and we know the growth could potentially be there as well. But in my opinion, I just think the company has to stop bleeding, and then they'll get rewarded. So that's why I'm saying, in my opinion, I think posting a little bit more of a narrow loss there in the next couple of weeks is actually potentially more heavily weighted, in my opinion, than the revenue that they could bring in. But I just feel like, again, we almost... I don't want to necessarily compare it to Boeing, because obviously they're a much larger company at the time, but I did mention like 10, 12 years ago when I used to work at the firm, I would see Boeing come out and they would post like these mixed earnings, but the stock would still be up like 3-4% pre-market, and it would continue to climb over the months and over the years. And in the moment, it didn't make much sense to me. And then if you look up at the time what their backlog was, remember, we're talking like 2013 or something. But they had a backlog, I think it was out till like 2020 or something like that. So that's why a situation like this, we know potentially that the revenue is going to really start chunking in down the road. What we have to make sure of is that, again, the company gets the bleeding in check and doesn't essentially put themselves out of business before they can actually generate and bring in that revenue down the road. But again, this is my opinion, but I am still bullish on this situation. And I just feel like if we are potentially near the low of the lows, even if we hit like this 150 level and just kind of like hang out here for a little while, I do feel that we may potentially be near the low of the lows. And of course, I'm hoping that the company finds its bottom and they're able to right the ship and correct these losses and just kind of bring us some value back here. Because that growth in backlog is pretty impressive, in my opinion, to double your backlog year over year. And again, I understand that the company has been missing on these numbers, but if we actually pull up where they came from, you can see these estimates went pretty high pretty quick, in my opinion. And, going back Q3 of 22, we can see the company brought in almost 100 million. Estimates were over 84 million. But now look, if we fast forward a year later, estimates were up here at above 180 million. So, I don't know about you, but not many companies see that type of growth year over year, looking at those same quarters, right? That's over 100% increase in that estimate, from 84 to over 180. And even here on Q4, you're talking about 50% increase year over year. First, this time in 22, you were estimating over 166 million. Now you're up to 258 million. That's a lot more growth than people realize. So, again, year over year, technically they came in below what Wall Street was expecting. However, this year over year growth is 27%, which isn't necessarily bad, right? That's what I think is also adding to the negativity as well. A lot of these estimates may just have been potentially just too high, and they may have expected the company to do more quicker. And that's why I mentioned in previous videos, in my opinion, I just feel like we're just a little delayed before we're going to see the low of the lows and the potential U-turn recovery. So the company may just be delayed 1 to 2 quarters behind where Wall Street really feels they should be. So that's why I'm saying, of course, it's not guaranteed here for this Q1 number, but if we turn around, Q2, Q3, and all of a sudden there are no issues, the bleeding is in line, we're forecasting, more narrow losses, or we're going to achieve positivity sooner than expected, and, now all of a sudden they're more efficient with their production and they're able to pump out 200-300 million a quarter and generate that revenue, then we're going to be talking about a completely different situation. But in the moment, the company does seem to be suffering, but I do still see value here, in my opinion. Again, this is just my opinion, but the debt has increased over the years. We can see here halfway through 23, debt 611 million. Then sub 606 as of last quarter, sub 604. But holding over 100 million in cash. We still have assets outweighing liabilities, even though they have been kind of getting out of whack. And as we see here, the equity has been consistently dropping here quarter over quarter, which in my opinion is a red flag. Book value per share following suit, dropping down from almost 4, now it's down to 273. But again, the company technically on paper may look negative, but realistically, again, if they had to close their doors, liquidate everything in their name, you would actually make money from this point, technically. Some numbers are down, but look, certain things like the gross margin percentage here, as we see, we were kind of bouncing around here, staying positive, then we drop big negative, and then we bounce right back to double digits, hitting almost 11%. And if we look, this was Q4, and this is the previous Q4 the year prior, and you can see the gross margin percentage was sub 9%, went from 8.9 to 10.9. It's a 25% increase year over year. So that's why I'm saying, I understand that they're bringing them down, but also at the same time, I just feel like we can't continuously beat them up if there are some positives at stake here, in my opinion. Operating margin minus 14%. Is it bad? Technically, yes. However, if you go back all of these quarters, that's the best it's been. EBITDA. Minus 10.6%. That's technically the best it's been going back the last 7 quarters prior. Net margin percentage did have this one positive quarter here, 20.5%. Before and after was negative. The best number before that was minus 22.7%. Now we're at minus 22.5%. So that's why I understand a lot of these metrics are still potentially viewed as negative, but in my opinion, I feel like we may potentially be about to turn that corner and be looking at that U-turn recovery. Again, this is just my opinion. And even though the equity has been dropping, the revenue supposedly off of the assets they have on their balance sheet, as you see here, climbing very nicely here over these quarters, going from 0.19 up to 0.33, so almost doubling that up. We know that Q4 is their best quarter, turning over the most inventory. Our debt ratios are climbing, which of course technically is not a good thing. But they're still forecasting the growth moving forward, and that's why I'm saying if they can get the losses in line, I think we will turn that corner, in my opinion. Because again, on the revenue side, yeah, they just missed 2 big quarters, but again, these estimates were pretty high. But also at the same time, technically they did miss, but they beat revenue 5 of the last 8 quarters. They beat on EPS only 2 of the last 8 quarters. That's why I'm saying I feel that this company could potentially turn it around. But, you know, the ball's in their court. It's really all up to them. But I did want to point out this trend line that I was keeping an eye on, this wedge that I saw. Let's go over the stock charts real quick. I'll let you go. Look at some of these pivot points here. We can see we have next support at 170, which is potentially right at the tip of that apex of that descending wedge that we looked at. So we could potentially drop down to 170, find that support, and then bounce up off that level out of the wedge, maybe back up to the high ones, maybe even $2 a share. MACD potentially about to cross to the downside. That's why I'm saying we could maybe have another red day and then maybe see a bounce. However, again, I was talking about how markets, in my opinion, were way too high and were going up for no reason. And now you have a day like today where everyone was waiting for bank earnings and banks beat across the board, tops and bottom lines, and now markets still chunked down on potential worries and warnings moving forward. I guess all of a sudden it's not as good as it seemed. You understand what I'm saying? That's why I say, in my opinion, you have to pay attention to a lot of this data, and you have to pay attention to the actual revenue and business that these companies are doing. Because, in my opinion, it just seemed too good to be true. And now, all of a sudden, if they decide that now through April, May, and June, we're going to be down and we're going to pull back to where we were, then unfortunately, yes, a stock like STEM is potentially exposed and could drop to lower lows. But in my opinion, we should probably bounce off that 170. RSI here at 37.5, we'll call it. But let's switch back to the Bollinger Bands. We seeing anything? Bottom Bollinger Band 169 on the daily, right? So we may drop a couple of cents, but then be ready to bounce off of that level. But we'll have to see how it looks Monday and Tuesday as well. Here on the weekly, bottom Bollinger Band 147. And that's why I said again, if we potentially come out to the lows of this trend line right around earnings, you are potentially looking at about 150. So we could maybe see a quick flash crash sub 150 to hit that 147. But of course, we'll cross that bridge when we get to it. RSI has been slipping here. Down here at 33.25. Stock has been below the mid Bollinger Band basically since the ball dropped. But personally, me, over the longer term, I do still like it. But again, I may be crazy. But, you know, it's just my opinion. It's how I feel about it. And I am just hoping, because I know a lot of people may have been holding for a while, and you are looking for that bottom of the bottom, and you're looking for the company to turn it around. So, of course, I am hoping for all of you that the company does potentially announce some few positives here, and then actually starts to rally up from there. But even just a quick reminder here, if we pull up just last quarter's earnings, so we can see we have some positives as well. Achieved key milestone, positive adjusted EBITDA Q4 and second half of 23. Expect to generate at least $50 million of operating cash flow in 24. Awarded contract by Mercuria. Expect to achieve a positive adjusted EBITDA between 5 and 20 million. And again, they're projecting this positive operating cash flow for the full year of 24 with no equity issuance. Again, this is their words, not mine. Which means we shouldn't have to deal with any dilution, any big potential drops from that. Have over 100 million in cash. Bookings for the full year up 44% from 22 to 23. Contracted backlog of 1.9 billion, up from 969 million, 99% year over year backlog growth. So that's why I'm saying, once they get these costs in line, if it is possible, we may potentially be off to the races, in my opinion. We are proud, deliver positive EBITDA second half. Increased margins, ongoing cost discipline. We believe we are in a strong position to generate positive operating cash flow. Underlying demand remains strong. Backlog near 2 billion. Also expect strong growth in revenue, bookings. Finally, we expect to achieve our plan without needing to issue equity. So this is why I'm saying, I just feel that we're just a little delayed from seeing the results that were previously expected. That's the way I'm potentially still looking at the situation. Now, obviously, if in about 3 weeks they disappoint and they say some negatives, maybe we'll have to reevaluate the situation. If we turn around, 3 months from now, next quarter, and, they miss again, then of course, maybe we'll have to kind of just forget about the situation. But also at the same time, we've seen with other stocks like Rolls-Royce that you may want to just keep your blinders on. Keep the blinders on, keep the head down, and just continue to plow through it, looking for the longer term growth. Because I'm sure on that way down there was probably a lot of shareholders that jumped ship on Rolls-Royce. And now they're very upset, right? So that's why I'm saying, of course, there's no guarantee that any of this can happen. Always understand, when you buy an equity, the company could go out of business, the stock could go to zero. Please understand the risks involved. But I still like the company. I do. I do. I don't know. Again, a lot of people may disagree with me. A lot of people may think it's a dog. And I know some people, even as I made the videos, over the months, people would leave comments and, oh, this company sucks. I had it up here at 8. I recently got rid of it. It's they're not doing the right thing. The management team sucks. I don't think they're going to be able to turn it around. Right? So a lot of people have lost faith in this company. And in my opinion, that sometimes is the time to strike. So, only time will tell, but I'll end it there. So, once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up, algorithm. Oh, wait, also, I wanted to show you here. So, yeah, on the 1 year, this 134 fib. I don't know if we're going to hit this 134. On the 5 year, I know it's extremely difficult to see right here, but as you see, on the 5 year, this fib right here, 157, right? And I told you, if we immediately potentially drop down to this trend line, we're maybe looking at about 160. And if we ride it into earnings, right? I was saying like 151, maybe 150. However, on this 5 year here, you can see fib level 157. So for all we know, that may be the low of the low in the immediate short term. And then we could potentially bounce from there, have a little run up, maybe like the week before these numbers come out. And then if they beat, we can start climbing up and potentially retesting and breaking back up through some of these trend lines. But yeah, my apologies. I forgot about that fib. And I just wanted to mention it before I closed out the video. But yeah, like the video, thumbs up, algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. You guys enjoy your weekend.